Hey everyone, just give everyone 20-30 seconds to load in, and then we'll kind of begin. Great, I think we probably should be good. So hello everyone, thank you so much for joining me. It's a pleasure to have you all here today to chat about the Mintec vegetable oil and edible oil market update. I'm Kyle Holland, a price analyst here at Mintec, and a little bit of housekeeping before we begin. If you would like to ask any questions throughout the presentation, please do so. It'd be great if you could put them in the Q&A, just so it's a bit easy to filter. If you put them in the chat, that's great as well. I'll try to get to them as quick as I can, but it can be a bit of an issue if there's a lot of chat messages. Session is being recorded, so if you'd like something, look at something at kind of a later date, or go back and revisit something I perhaps said, or perhaps you missed, you can also do that. And the slides will be available afterwards as well, so you can go through those at your own leisure in your own time. Excellent. So this kind of covers the agenda for today. So firstly, we'll be looking at olive oil, rapeseed oil, into palm oil, soybean oil. And I'm hoping we'll have probably 10-15 minutes for Q&A. If we don't, please feel free to message me questions in the chat, email me, and there'll be a slide at the end where you can see my email address, for example. And it'd be great to get any questions you have and kind of work through those if we don't quite have time today. I'm hoping we will do naturally. Excellent. So first, we're going to talk a little bit about olive oil. So as you can see from the pie charts, production is largely dominated by Spain, Italy, and Greece, who make around 64% of global production. The major exporters, as you may imagine, are fairly similar to the major producers, but it's worth highlighting here that there is a lot of intra-trade between the two. One key highlight of this is Greek olive oil to Italy. There's quite a large amount that goes on, goes into Comitario olive oil, or sometimes is kind of blended with Italian olive oils rather than the whole of Europe. Tunisia and Morocco also are steadily increasing their production. So Tunisia have kind of a wave of their production, which we'll see on the next graph, but they are producing more and more year on year. Morocco, very similarly, are producing quite a large amount of olive oil now and again, although it does tend to wave. The USA are quite small at the moment. So USA production, I peg it roughly at maybe 15,000 metric tons. Most of that's consumed domestically. They still get a lot of their olive oil from the nations that we can see as the key producers. So Spain, Italy, Greece tend to be the areas they import from. But we are seeing a move from the US in general to kind of cultivate olives more, and then cultivate and crush them for olive oil as well. Excellent. So for people that maybe not quite as familiar with the olive oil market as some of us on the call may be, this is kind of a typical harvesting and flowering window for olive oil. So typically the flowering begins more or less around now. So April, May, June for Spain, and many of those is kind of the key window. And it's a particularly important time. This is where the rain really counts, the conditions really count, because this is effectively how much olive oil fruit will be produced. So it's a very key time. So harvesting roughly October, November, December, thereabouts. It can stretch into January and February, depending on the tree, and even March sometimes in Spain, depending on when the yields come in, what part of Spain we're looking at as well is also a key point. So if we look at Italy next, we can see the flowering's a little bit later. May, June tends to be their general flowering window. Sometimes it stretches into July a little bit, but not quite as much as some of the other nations perhaps. So also the harvesting, very similar to Spain, although generally finishes a little bit earlier. Jan tends to be the end of their window. And Greece, very similar to Spain, don't need to coconut and go all over that again. And Tunisia, very similar again. So here I wanted to talk a bit more of a deeper dive, I guess, into olive oil production. So I think the graph quite nicely highlights this. So we can see 2020 to 21 values for Spain, which is the kind of light bluish turquoisey color. We can see that production in terms of compared to 2018, 2019 was greatly down. So a large reduction in Spanish production of olive oil. Now, the number I have in there is a rough estimate. So I think I have the 1.38 million metric tons of oil to be produced in Spain. This is still under kind of a lot of discussion, a lot of consideration. I've heard numbers much lower than this, people I speak to in the industry. I've heard 1.34, 1.35 as maybe some of their guesses as well. So it's worth noting this is a rough guess, but might not be the be-all and end-all number for Spain. Also, if we look at some of other nations, as I mentioned, Tunisia is a great one to point out here. You can see if we look at 2017 to 2018 and then 2019 to 2020, we see a great spike in their production. Now, the issues Tunisia have tend to be around their agronomy and their kind of plant husbandry. It's not quite as advanced as some of the other nations have in place, such as Spain and Italy. So their production tends to go almost in waves, where it's high, it's low, it's high, it's low. And this really impacts their kind of overall growth. Although they are growing, the area is increasing for Tunisian olive oil, and I hear it's fairly good quality as well. Morocco is another one of those emerging nations we talked about a moment ago, producing steadily more olive oil year on year, and they are certainly planting more olive trees in order to grow olive oil fruit in perhaps 3, 4, 5 years, a kind of a longer term outlook. Now, what I want to touch on slightly on this graph as well is that if we talk about Tunisia and Morocco and some of the other kind of slightly smaller producing nations, they often provide a very good outlet for prices. And what I mean by this is Spain, for example, prices often go quite high in Spain, and Italy prices are quite high too, and Greece very similar to this. So in years where Tunisian production is good and Moroccan production is good, it often offers buyers an alternative. So rather than buying from Spain, if the quality is kind of quite good, and I hear quality is improving for Tunisia and Morocco, it gives people an option to, I'm not paying the Spanish price, I'll go to Tunisia or Morocco and buy instead. And this is kind of very important because this year, with the production not being great from Tunisia and kind of static-ish for Morocco, slightly up perhaps, it doesn't give buyers that outlet that they normally have. So production this year is very much centered around Spain. Italy had huge issues with Xylella, which is olive oil tree leprosy, essentially, and it destroyed a lot of their trees. Their yield was dramatically impacted by that. And Greece and Italy and Spain all had trouble with weather, which was greatly damaging production effectively. Okay. Excellent. So here I want to talk about the current market situation a little bit more and go into a little bit more depth about the current price levels, what I'm kind of seeing in the market on a day-to-day basis. I talk to people from these regions on a daily basis to collect the prices and kind of share information. So if we look at the kind of yellowy orange line, this is olive oil extra virgin from Andalusia, blue being extra virgin olive oil from Hania in Greece, and the red line being extra virgin olive oil from Bari in Italy. So what I want to point out is a dramatic uptick we can see in prices for particularly Spanish olive oil. So if we look at kind of pre-2021, excuse me, in December kind of time period, we can see prices were probably 2.8, 2.7, not very high really for that time of year. If we look back in the previous years on the further end of the graph, we can see prices have been a lot higher than that. But what we began to see was, and the production graph was indicative of this, Spanish production started to be revised down quite dramatically. Early estimates I was hearing from my contacts in the industry were saying 1.55 million metric tons of olive oil to be produced from Spain. This was revised down to 1.45, 1.43, 1.40, and then sub 1.4. So very quickly, it was realized that production wasn't going to be as high from Spain as people maybe expected. And then prices started to turn upwards because of this. Many buyers began to think, perhaps if there's not a lack of supply, I should try and consign if I can. And it was dramatically impactful for prices. We see them move up, not quite in a straight line, not parabolic, but there's certainly a nice curve to the prices there as they move up quite rapidly. Now, if we take our attention to the end, so this is much more recent pricing, so May pricing, we can see there's been a slight flattening on many of the price levels, so from Greece and from Spain as well. And what kind of has happened in the market is that the prices have reached a level where many buyers are considering their options a little bit. Prices have reached, good levels, 3.5 there or thereabouts on Spanish, 3.4-ish on Greece there or thereabouts, and it's kind of rationed demand a little bit. Also, there has been a lot of holidays across the EU with various national holidays in Greece, Italy, and certainly Spain as well, which has dampened trade a little bit. But it's very important to kind of note that many people in the market expected prices to continue to go up. They seem to have now kind of tailed off, admittedly for now, as the current situation suggests. Brilliant. So now I want to talk about the stock levels in Spain in general. So if we look at the table here, we can see production, sales, the stock with producers, the stock with bottlers, and the oil that's currently in storage. Now, these are kind of estimates from people I speak to in the industry. So certainly don't take them as gospel, but they give us a very good kind of guideline of what we're looking at in terms of Spanish levels. So sales, I think, is certainly one to point out, and it has been a key one, I think, in the last couple of months. Sales have been really, really high. So the outflow from Spain, if we discount imports, has been very, very high. We're talking kind of 130,000 metric tons going out of Spain. Previous months, it was kind of similar levels to that. I've even heard kind of 140, perhaps from some sources. So the sales were really, really high. And what this has also done is it's kind of limited the amount of oil in the marketplace. So as mentioned before, it's kind of encouraged some people to consign if they could. Issues with shipping. So yeah, certainly a global issue. I could probably do a whole webinar just on that, to be honest. But Spain are similarly struggling with shipping. There's a real lack of containers, particularly in the 20 to 40 foot. There's a real lack of flexi tanks as well. So it doesn't appear to be a huge, I guess, move yet where we'll see that ease in. It seems to be still very much of a struggle for many shippers. Importers and exporters are similarly struggling with this. The estimated carryover looks to be very tight as well. So the amount of carry we'll have into next season looks like it's going to be very, very, very minimal, way below what we'd normally see on a 5-year kind of average. Now, what this means is that stocks, unless they dramatically rebound, which we don't know quite yet if they will, are likely to be much below. So we don't see kind of that huge uptick of oil, at least from the carryover yet. Declining stock levels is another thing I think we need to talk about as well. So if you look at the kind of stock, particularly producers, you can see, from April 19, April 20 compared to 2021, we can see a dramatic decline in what they actually have on hand to sell. Now, if we compare that conversely with the bottlers, they seem to have very similar stock. Now, I'll move on to this in a moment, but it's worth mentioning here that the bottlers have fairly good stocks, and they haven't really been in the marketplace to buy, looking to kind of consign any great levels. So without them in the market, as we saw, prices remain rather static in the last few weeks. Also, as we've kind of already pointed out, stocks globally are low. There's been a downturn in production for most nations, which keeps the availability of oil really limited. So this is kind of the nearby outlook, and I want to talk about what people think may happen, people I speak to in the industry, and market participants more generally. So Spanish farmers are well aware that they hold the lion's share of supply, and what I think is important to mention is that they are in no hurry to sell. They know they have the lion's share of supply. They know supply is concentrated in Spain. They believe, maybe rightly or wrongly, that they can hold on and look for better prices to come. Many other nations don't even have a great supply on hand to even sell, even if you go into those nations to try and consign. It's just something that's very, very difficult. So global consumption is also set to increase. Estimates range from kind of 8 to 11%, roughly there or thereabouts. So what this means is consumption is certainly going to go up, as it does most years on olive oil, it must be mentioned, particularly in the US, who seem to have a greater appetite for olive oil year on year. It could be a very tight situation if issues in Spain rather than kind of continue as they are now. I think a lot of people in the market think that the short stocks could keep prices really elevated. So the stocks are rather short, as we've discussed numerous times already, which is not usually a bearish sign. And what they say is, with a lack of supply, if you want to purchase, you're almost forced to pay Spanish prices because they have the stock. If you want to buy, that seems to be the place that most people are going to go to. Bottlers and distributors have not yet passed on olive oil prices. And what I mean by this is that bottlers right now are in quite a difficult situation. They have kind of eaten the costs kind of more towards our end user and haven't yet passed olive oil price onto the shelf. Now, if this is done, and I hear, for numerous people, it could be inevitable. I wouldn't, that's kind of what they say, that it would ration demand, and demand would be dramatically reduced for olive oil in general because the price would be too high, almost, they're prohibitively high at the moment for some people, and this would increase the prices further again. So it could have a real impact on the demand we see for olive oil, and then could be bearish for prices if this kind of is realized. So weather is also a massive concern in Spain at the moment. I see forecasts and contacts tell me that rain is forecast consistently, but we're not really seeing that materialize. And if we remember the flowering cycle of Spain for olive oil trees, this is a key time where rain needs to come and needs to kind of furnish the trees to get a good flower. I think it's certainly worth pointing out, as many people do, that conditions right now actually look quite good if rain does come. But whether it will or not is still very much in the lap of the gods, and we just don't really know right now how that will kind of turn out and how that will look. Excellent. So if we move on to rapeseed oil. So on the screen, as you can see, the major producers tend to be the EU, Canada, and China. The EU import a lot of actual rapeseed and then crush it in the various facilities we have across the EU, Germany, Austria, Lithuania, those kinds of areas. So China is a large producer, but like very many of Chinese commodities, once it's kind of in China, it's rare to see it appear on the open market unless they have a huge surplus. Then maybe we might see some oil come on the market. But generally, what is in China tends to stay in China within reason. So Canada accounts for the lion's share of rapeseed oil export. It's kind of almost academic, where Canada produce a huge amount of rapeseed in general. It should be commonly called canola because it is Canadian rapeseed oil. So again, you may see all the commodities kind of follow the same format. So if we look at the rapeseed typical housing and flowering windows, we can see that roughly planting in kind of most areas in the EU at least occurs in September, October. Now this has changed a little bit as people are trying to avoid some of the pests. Some have been planting kind of late August. That's kind of been certainly a feature of the UK plantings. Generally, we'll see harvesting fairly soon. July, thereabouts. June, July tends to be when we see most of the harvest in the EU come across, and this will kind of be the new crop. China a little bit different. So generally we see the sowing kind of September, October, November, December, with their flowering harvesting in Feb, March, and then kind of April and May is when they tend to kind of collect the crop and get that on board. It often stretches into June now, almost kind of to the end, like middle of June-ish, thereabouts often, at least in recent years. So if you look at Canada as well, very similarly, I won't go into too much depth on the rest of these, but the flowering windows are extremely important to know which market year we're in and which year we're talking about effectively. So this is, again, something I really want to talk about and really want to highlight. So the black line, I think it's more or less dark blue really, is the 2021-22 estimates. Now, for rapeseed in general, seems to be fairly static across the board. If we take the EU as a whole, so the EU 27, excluding the UK at this point, rough estimates are around 16.45 million metric tons of rapeseed to be produced. With the UK, you probably add in a million or so onto that, so roughly 17.45 there or thereabouts from the EU as a whole. Canada have planted a bit more this season, so it looks like there will be a bit more Canadian rapeseed onto the market. Although it did come in below industry expectations, many people thought they would plant a lot more than they actually did. It didn't come in quite as high as many people were expecting. So I think it's also worth kind of talking about here that Canada have huge issues at the moment with their weather. It's a particular problem. They have had some decent forecasts coming in, and I believe they are certainly due some rain. But I think the question mark for Canadian production is how much damage has actually been done to the crop before the rain kind of comes in to save the crop in general. So also I want to highlight the direct trend we can see. So if we look at kind of France, Germany, the UK certainly, and Poland in general, we can see a general slide off in production for rapeseed from these nations. And there's various reasons. It'd be kind of too in depth to go into them, but the neonicotinoid ban was certainly a huge issue for France, Germany, and the UK. A lot of pests returned. The cabbage stem flea beetle is a key pest now in the UK, and I believe in parts of Germany too. And this caused quite a big slide off in production. It's not easy for farmers to make a good margin if you're losing significant amounts of your crop to kind of pests. Also, weather's become more of an issue. As we know, global warming is kind of heating things up and has become more of an issue for the crop to kind of survive in some of these kind of really hot temperatures. Rapeseed does do kind of okay in mildly hot temperatures, but if they get to levels we've been seeing the last few years, it becomes a real issue. And also rapeseed is quite vulnerable to extreme rain as well. So it kind of needs that sweet spot, although it is fairly hardy in general. Also, I want to briefly point out the Australian estimate. You may see that it's particularly higher than last year. So the reason being, just yesterday I was talking to a lot of my contacts about this. It seems like Australia have seeded a lot more rapeseed area. So the working estimate for some people is 5 million metric tons plus could be produced. I think many people I speak to are a bit more cautious than that. That would need near perfect weather. But it looks like Australia could produce maybe 4.5 million metric tons plus, which would be a large uptick in crop for them, and could ease some of the tightness we're seeing in rapeseed in general. But again, it's very much weather dependent. There's a long time till Australia kind of harvest that crop. Excellent. So now I want to kind of talk about the underlying and what's really been kind of driving some of these price rises on rapeseed. So if we look at the graph, we can see in the red, we can see rapeseed futures contract from ICE for Canada, and in the blue we can see the rapeseed for Euronext or Matif, depending on what you'd like to call it. So we've been seeing rapeseed prices on the futures hit kind of historic highs. Huge price increases, huge swings day on day. I mean, one day we kind of saw 50, 60, 70 up, which is really kind of astonishing in some ways. This is largely because, as I mentioned, rapeseed doesn't look like there's going to be a huge uptick in production if we look at some of the graphs we just did. And people are kind of banking on the fact that things perhaps wouldn't really improve. But we've seen these levels kind of coming down the last few days. That's because, as I mentioned, Canada have the weather looks slightly better. Some of the weather looks slightly better in France as well, who have been kind of battered by some of these heat waves and kind of freak weather almost, I guess. So it has kind of come off a little bit, but prices have been very high for the underlying rapeseed. Naturally, these two are futures, but the cash market is very similar. Prices have been hitting kind of historic highs on most of them. I think roughly higher than 2008, which is our commodity superstar card, some of us may remember. So the current market situation, buyers at the minute are kind of reluctant to purchase on the nearby. So rapeseed oil prices, as you can see in the graph, although have come down a little bit. This is FOB Rotterdam, just kind of FYI. The prices are still very high. So buyers tend to be kind of reluctant. They seem to be looking more on the forward curve if they can to purchase. So physical delivery still, but kind of further down. So maybe OND 2021, a kind of JFM January, February, March 2022. This seems to be kind of what they are more interested in. So doesn't seem to be a hell of a lot of trade going on at the moment on the nearby. Buyers have kind of pulled away a little bit, perhaps not quite as interested they were in the last few months. And again, this can be attributed slightly to some of the weather kind of easing a little bit. New crop may be looking a little bit more kind of better than we perhaps saw before. So that's certainly something to think about as well. So rapeseed oil has also been pressured by some of the external vegetable oil complex. Last few kind of days, and certainly last week or so, maybe even week or two, we've seen a huge yo-yoing of prices in general. So the future's been yo-yoing. We've saw kind of CPO, so crude palm oil, kind of going down as well. And rapeseed is not immune to some of these movements either. So nervousness in the other markets certainly impacts rapeseed, not quite as much as it did in the past. If we look at maybe 4 or 5 years ago, rapeseed was much more impacted by some of these downward side moves, but is still impacted. So once buyers become nervous in one market, it does kind of trickle into rapeseed oil. And we have been seeing some of this. So there is a large backwardation. So backwardation is effectively when the forward prices are less than spot, so kind of going downwards in value. And the backwardation that we're seeing, so the discount you can have if you are purchasing, has led to a numerous amount of deals being kind of brought on the forward curve. This has in turn, though, made these prices rise quite dramatically. We saw kind of €100 a metric ton kind of rise in the last few weeks on these forwards. So the increased interest is leading to these prices moving higher in turn. And some of these prices we're seeing on kind of JFM 2022 are extremely high if we look at a kind of a 5-year view. Very high indeed. So I think another thing as well, there's a very distinct lack of physical oil. So there doesn't seem to be a huge amount of oil in the marketplace to actually buy. And this is largely due to the issues we have at rapeseed last year. The crop was kind of not great. A huge amount of issues in general, kind of even getting it onto the market. It's kind of very difficult in general. So rapeseed oil remains a pretty good substitute for sunflower oil. It has come off a little bit as rapeseed prices, or rapeseed oil prices rather, have gone higher, but it was being used as a quite distinct substitute for sunflower oil, in particularly in blends for margarine, some of your butters, and some of your other kind of key commodities, if that's a possibility for whatever blend you're using. So this is kind of the outlook again, as we saw with olive oil, according to my participants and people I speak to in the market every single day. So as we kind of briefly touched on, 21, 22 production looks rather static. Australia, like as we mentioned, may produce more, but there is a very tight stock situation. This seems like it's unlikely to improve. There isn't just a huge amount, unless there's some rapeseed I don't know about on the moon. Excuse me. It seems like it'd be quite a tight season yet again. So many market players don't really see a huge amount of bearish signs, and some of the reasons they kind of give is consumption for rapeseed oil is set to increase. So roughly 10%, I've heard even up to kind of 13% from some estimates. So with the flat stock levels and the increased demand, this is certainly a bullish sign, and that's what market participants say. They say if production is kind of static and consumption increases, that's a certain bullish sign for the market in general. Consumption certainly looks to be going up even more than that. I mean, if you look at the Netherlands, roughly 15% is kind of their estimation. I think Germany is probably 13 to 14% again. So across the EU, consumption is moving up as well. And the EU is more greatly reliant on imports than kind of ever, with the lack of production from the EU in general, and the UK as well. So the weather has been improving, as we briefly touched on. So Canada and France, weather looks a bit better. There is some rains kind of forecast and certainly coming, but there is worries around how much damage the crop has already sustained. So the rain, although it's great that it's kind of coming in now, it's not a fix-all. It doesn't mean that the crop will be miraculously, much better. We don't really know the damage at the moment that France has sustained to their rapeseed crop, although pictures I've seen from my contacts do not look the best. I will be perfectly honest. But yeah, the sustained damage they've taken, it remains to be seen how much the rain can improve this. So I think one story that I think shocked me and probably shocked a lot of you guys on the webinar is some of the abnormal trade flows we've been seeing. So Canada have certainly brought Ukrainian rapeseed for August delivery. And I hear very much that they're in the market to do this again. That's the rumor, at least, that's going around. So it's just not usual. I don't think I've ever heard of that happening. Canada, as probably we know and we've seen from the graphs, are a huge rapeseed producer. But it seems to be that some people in Canada, at least, are worrying about their own production due to the weather and how much damage their rapeseed has sustained, particularly in Saskatchewan, for example. It's not clear how much damage has been done, and we simply don't know. And I think it's making generally people a little bit nervous in the market. We don't see huge consignments. We don't see huge long covers, although, as I mentioned, we do see buying on the forwards where available. Excellent. So now moving to palm oil, so a very quick drink. Excellent. So in terms of palm oil, the kind of key producers are certainly Indonesia and Malaysia, accounting for the vast majority of production and indeed then export. So India are a very, very, very big importer of all edible oils. I think they're certainly the world's largest in general. But volumes among the rest, for example, the EU, China, East Asia, and certainly others who are grouped here, is roughly quite even really across the board. So that's just, a quick FYI. So I think this is a really, really important slide. I want to take a bit of time to discuss this. So Malaysian production has been faltering quite badly. So if we look at the kind of the blue bars, that represents 2019, and then the yellow orangey bars, that's 2020, and then the red bars is 2021. So if we look at the October values compared to 19 to 20, we can see a slide off in production yet again. Not massively down, but enough to be certain. So November, again, production didn't match up. December was roughly at parity, which was certainly interesting. And if we look at Jan, for example, Feb, down again, and then April, down again. So what I think has been a huge issue in Malaysia is firstly La Nina. So La Nina came and kind of exacerbated a lot of the problems Malaysia already has with their production, with some of their supply lines. When La Nina hits these areas, rather than conversely compared to Brazil, who are very dry, Malaysia and Indonesia tend to suffer extreme rains, so very, very wet weather. And this certainly hampered logistics, made it very difficult to get the fruit kind of onto roads, onto sea, into refineries, and was kind of a major issue for some period of time. And it's lasted kind of into 2021 as well. But I think the real big issue that many people talk about is certainly COVID-19 with Malaysia. So Malaysia and many other nations really rely on migrant labor to pick the fruit. Not uncommon, happens in huge amount of industries across commodities. But the COVID-19 restrictions have meant that a lot of laborers in Malaysia that normally come from foreign countries into Malaysia to pick the fruit have simply not been allowed. There's been very, very strict restrictions of who can come in. The plants were running for less hours, roughly 6 till 6, 12 hours rather than their normal kind of 21, 22 hours. It's just been very, very difficult. I think it's also worth noting that palm fruit in general tends to rot quite quickly. So once it's ripe and once it's ready to be picked, if we kind of don't see it being picked, it kind of almost rots. So it goes from being useful clearly to not being useful anymore. And COVID has been a real sticking point. Also want to bring slight attention to the May estimate. This is from some of the people I speak to in the marketplace, some of the market participants, and the general consensus, I guess, if you could call it that, is maybe 1.4 to be produced from Malaysia in May, which again is a direct downfall again. COVID looked like it was getting slightly better in Malaysia, and yet again they're under very, very strict lockdowns. There's a huge amount of issues there with labour. There's effectively, that being kind of too grandiose, virtually no one to pick the fruit, and we are seeing this impact production massively. So the current market situation for palm oil, as you can see on the graph, we're looking at crude palm oil, CIF Rotterdam, so spot values. So prices have been highly volatile, not only in the cash market, but in the futures as well. And although the cash market quite clearly isn't futures, it does get impacted by the futures market. Direct and huge moves in the futures market does tend to impact physical pricing somewhere down the line. And these kind of up and downward moves we saw last week have kind of certainly some technical selling, some unwinding the positions to get some of these profits we may see, certainly impacted the physical market. So a rough move down was roughly $25 a metric ton, there or thereabouts. So there's been also substantial issues with deliveries, as I mentioned before. With it could be a whole webinar on its own. The shipment issues. So Malaysia and particularly Port Klang have a huge issue at the moment. Many calling the issues there endemic, which is not usual for shipping at all. The large backlog means that many millers are still working on their April contracts, and the shipping situation there does not look like it's going to improve in the next week or so, or certainly today. Massive problems with even getting the goods kind of onto sea and getting them going to the destinations they need to go to. So there's been distinct rumors that refiners may take delivery from the Bursa. So what this means is that they will buy a contract and let it go to term effectively. So normally what we see from certainly futures is that people unwind before it gets to physical delivery, because you have 100 tons, 200 tons, whatever it may be, of palm oil turning up at your door. Similarly, if we look at rapeseed, for example, the quantity, if it's physically delivered, will turn up at your door. Now, people have been doing this on purpose rather than, making a mistake and not unwinding quick enough. And it's really uncommon. I think that really highlights the issues Malaysia are having, not only with their production, but certainly with their shipping as well. People find it very difficult to get CPO, so crude palm oil, into refineries to do anything further with it. So whether that was RBD or whatever that may be further down the chain. So price on the forwards for physical delivery are fairly high at this time of year. It's hard to see offers on CIF Rotterdam that are kind of below $1,000 a metric ton, which is fairly high if we look at kind of a 5-year average. And it's certainly something to keep an eye on as we move kind of throughout the season. So high exports in May for particularly Malaysia supported prices. I want to highlight this was early May. Issues kind of are more abound in later May. But the high exports certainly earlier in the month helped support prices and keep them from kind of falling to levels that perhaps some people thought they might. So again, don't want to kind of bang on about it too much, but persistent labour issues in Malaysia are continuing. There doesn't need to be kind of any end to that right now, at least. Brilliant. So yeah, slightly more on the current market situation. So palm oil is still rather cheap. If we look at the graph for comparison and we look at kind of our red line, palm oil is still fairly cheap compared to some of the others. So that certainly gives it some weight in the market. It's still a fairly cheap option, and many of the other kind of buyers for the other oils have been a little bit deterred. Price has been particularly high. It's put some people off, as we discussed before. But palm is still quite a good hedge, even if you're buying kind of physical. And we have seen some buyers actually doing this, purchasing physical to perhaps outlay this later on down the line when it becomes convenient for themselves. So the biodiesel mandates from Indonesia, particularly their B30, have been very constructive for prices. And many people early on thought that this wouldn't last, and kind of palm oil would kind of that Indonesia would kind of relax some of these mandates, maybe go to kind of B20, B10, there or thereabouts. That simply hasn't happened as of right now. And it's been the levies naturally have kept prices from that region rather high. And it's kept them certainly in the range that we may not have expected to see should those have been turned downwards. Palm oil is kind of reliant a little bit, at least in intrinsic terms, on soy oil, and soy oil has been fairly high, and that's been keeping price on palm rather elevated due to the fact that you can substitute them so easily. So we normally see kind of an intrinsic link between the two, so they almost track each other like that, with a gap in between naturally for prices, but do tend to track each other quite closely. So this is kind of the outlook again, according to my participants, as you may imagine. If we look at the graph on the left, I think it's a really good graph to highlight some of the production by year that's cumulative. So in addition, effectively. So if we look at the kind of dotted line, that's roughly where the 1.45 million, excuse me, metric ton mark would take us in terms of looking at the graph. So it's just something that kind of gives us a nice visual of where where production is and where it's likely to kind of turn. So I think one of the key things I hear day in, day out is how slow the recovery has been for Malaysia. So I think early on, many people thought that COVID would be less of an issue. I think many people thought that across Europe too. And things would kind of get back to normal. Production would then increase, and then prices could potentially go bearish for palm oil, particularly from Malaysia again. Now, the sentiment now from the market appears to be that it's going to be a very long time. Maybe, I mean, I even heard, 2022 before things get back to normal. People are now beginning to doubt the speed of recovery and indeed when the Malaysian production recovers. I think it's a very valid point looking at the issues they have right now with COVID-19 throughout the kind of the key producing areas. So demand is also in question really for palm oil in general. So India have their own issues with COVID, and India are one of the key buyers for palm oil without a doubt. So how much demand they actually want is certainly questionable right now. We don't really know how that will turn out. The amount kind of India normally buy could be under threat because, I mean, the COVID crisis is kind of turning attentions elsewhere. Although I think it's worth mentioning that India still do have to cook, and palm oil is a key cooking oil in India. So, it's kind of almost in the lap of the gods, I guess. So if kind of production does increase, and to be honest, I think many people think it probably won't, at least for some time to come yet, that could increase pressure to sell. So this would be another, I guess, form of a bearish move, as in even if kind of the demand kind of wanes, this could be another bearish factor where if production did increase, we'd have increased supply, which in general terms on most commodities is a sign of a bearish move downwards in terms of most commodities. So as briefly mentioned on the previous slide, palm is very reliant on the external markets. So soybean and soybean oil, it kind of, because of the links between the two, it does kind of suffer from downward moves in those. So if we saw a significant downward move from soy oil, from soybeans on particularly on CBOT, that could trigger a correction in palm as well. And many people tell me that they think palm is quite vulnerable to a large correction, simply because they think some of the fundamentals have been overplayed a little bit, and palm's not quite as bullish as some people think in the marketplace. So consistently, I hear rumors about Indonesia reducing their levies on their B30 mandate by $100. Although I think many people kind of question this. Most governments are kind of looking to kind of get as much revenue in as they can, and this certainly is one way that Indonesia are getting some revenue. Some participants are a bit unsure why they would do this, and even if this will kind of happen at all. But it is impacting the market, which is why I mention it. People are thinking about it. It is in the back of people's minds, particularly buyers. Excellent. So now we move on to soybean oil. So the major producers of soybean oil, China, US, Brazil, and Argentina. Soybeans, what I'll look at in a moment. So China again account for a large amount of the soybean import. So rebuilding their swine herd has been a huge task for China. Africa, after the African swine fever that ravaged much of their hog herd, anywhere from 50 to 60%, depending on which figures you are looking at. So rebuilding that has been a key issue. So generally trying to import soybean, crush it, then the feed generally goes to their hogs, and the oil is kind of stored or used internally as well. So India, again, as we've discussed on palm, are a key importer of soy oil for industrial and food-based use as well. Excellent. So the typical harvesting flowering typical planting, harvesting, and flowering windows again for soybean. So I won't go too much into depth of this because I am aware of the time, but generally that's the kind of key harvesting areas. So Feb, March, April, May for Brazil, although it's a bit later this season because they had huge issues with drought, due to La Nina again actually, where they didn't plant until much later. So the harvest came naturally a little bit later as well. USA are kind of planting more or less now. I have some updates on that I will certainly share in a few moments. So that's the kind of general flowering and planting windows. So production, if we look at kind of the key producers, we can see that Brazil are producing a huge amount of soybean. Now I think 136 million metric tons in there for Brazil right now. I've heard even higher numbers. I've heard 137, I've heard 138. But for a general consensus, I think 136 is where a lot of people see the crop, which is certainly a bin buster. It's kind of the record for Brazil. And I mean, if we look at estimates for next season, I've heard 144, which is rather incredible from them, which is almost unheard of, I guess. So the US produced a good amount of soybeans, there's no doubt about that. And many of these, as we mentioned before, actually went to China to replenish their hog herd, were crushed and used in feed use. So that's kind of the key producer. Argentina do produce a fair amount of soybeans. They tend to export a lot of soy meal and certainly some soy oil as well. Beans themselves, raw bean, I mean, in this case, not generally exported by Argentina quite as much. It tends to be a little bit further down the chain than kind of the key areas. So I think it's certainly worth looking at the soybean and soybean oil price rises. So if we look at the red line, this is the CBOT, and we look at the blue line, this is soybean oil FCA Netherlands, and price rises on soybean have been very, very dramatic. As I mentioned, demand from China has been huge. They have needed a huge amount to replenish their hog herd, and they have been buying ravenously for some time now, particularly at the tail end of kind of 2020 and into 2021 as well. Tailed off a little bit now, it must be mentioned, but their buying was rather ravenous, certainly supporting soybean prices, and in turn kind of supporting some of the soy oil prices as well. It was just almost a perfect storm for soybean in general. We saw, a huge amount of exports, particularly from the US, go in there and furnishing their kind of soy needs in general. So I think also what I want to mention here is that we've seen a lot of investment, particularly on soybean oil and certain other ag commodities, certainly as well on the CBOT, from, I guess, non-traditional agricultural investors, I would probably call them. So a real influx of people getting involved in investing in ag commodities over some of our more traditional risk commodities, such as maybe metals, oil, etc. And this has helped keep soybean and soybean oil prices quite well supported. It's given quite a nice price floor where, unless people unwind their longs dramatically and rather quickly, it almost gives it a price level where it can't really fall below that, at least not easily. And I think that's something that has not really happened since 2008. We haven't seen this kind of level of vigor in getting involved in agricultural a kind of a basket of ag commodities and investing in those for a long, long time. It has been sometimes we've seen this. I mean, contacts tell me anecdotally that they have heard numerous people trying to get involved, almost bringing them up and asking for advice and things. How would they do it? So I think that's something to certainly keep in mind when we look at soybean oil. Excellent. So the current market situation on soybean oil. Soybean oil kind of took a bit of a bearish turn. I think it's probably worth mentioning. But the news from President Biden that the US want a green fuel plan and the key use will be soybean oil really, really propelled the soybean oil and soybean markets yet again. So it's quite a dramatic plan by President Biden, but it certainly has driven the markets without a doubt in my mind. Things have been kind of bullish, although they have come off a little bit, which you can see from the graph. But it's been huge for the soybean and soybean oil markets in general. So soybean oil supply is generally quite limited, probably severely limited actually. And this has been helping to keep prices elevated. There's not a lot of oil in the market. It tends to be a little bit of a scramble over the supply of oil, or at least there can be, depending on which oil it is. This helps keep prices rather elevated. And as we can see from the graph there, really. So I think I want to note also the spread we can see. This is CIF Rotterdam naturally, but the spread between soy oil and palm oil is huge. It is not usually this much. You know, we usually see a much less of a gap between the two graphs, as you can see on the left there. And this is kind of indicative of the way soybean has just rocketed up from some of the reasons I mentioned. It's just almost gone on its own compared to palm oil, which is exceedingly rare, really. So last week, I want to mention the commitment of traders report as well. So we saw some profit taking, we saw some trimming of their net long positions to roughly mid-April level. So we're not talking huge cuts, but it's something to keep in mind. It did shake the market. That's why we saw a downward turn on the physical markets as well. Some of this caused a little bit of nervousness in the marketplace. People were a bit worried that maybe this was a kind of longer term strategy and we'd see a lot more unwinding than we actually did. I think it remains to be seen, but from the commitment of trader report that comes out, I think this week again, we'll perhaps see where the positions lie a bit further on into the kind of the marketplace. So the outlook, I think, for soybean is quite interesting. So yet again, demand could be an issue. With India having their own issues with COVID, there's also questions of how much soybean China will actually want to buy. They seem to have a decent little stockpile right now, and don't seem to be greatly interested, at least currently, in buying, at least not this week so far. And this could be particularly bearish for soybean oil prices in general and soybeans as well, depending on the demand, really. Without demand, prices usually turn downward quite quickly. So this has just come up today, actually, and just before the webinar, I was on a call about this with a few of my contacts. There are real question marks about governmental intervention in speculating on some of these futures. Now, depending on if the rumors are correct, which at the minute I'm not sure they are, but it seems like China certainly have made moves, if admittedly if true, to limit some of the speculation we see from kind of what we might call mom and pop investors, so small investors. And India seems to be of the same mind. We might find out Friday what they want to do. Now, kind of limited investors in any kind of capacity would likely be a bearish impact on the market, because we would see less people getting involved, less people perhaps looking to get involved, and that could be a real issue for soybeans and soybean oil moving forward. So many people think the prices are just really too high on certainly soybean oil, and they are more than happy, some buyers at least, to wait to consign until prices fall, or at least they perhaps think they might fall. So the markets are extremely volatile, as we've kind of discussed throughout the webinar, really. There's a real kind of yo-yoing of the prices right now. People are a little bit unsure, and if people are unsure, buyers simply don't buy. And it's making it very difficult for market players to kind of take in long positions, to take some hedging positions. It's just kind of an uncertain playing field, really. The weather has improved as well. So the weather looks much better across the United States, for example. I hear they're roughly 75% through their soybean planting. which is above the 5-year average, but slightly below industry estimates at 80%, which, the improving weather looks like it could potentially, according to market participants, cool prices if it continues to kind of impact some of the areas that are key for growing, particularly in the US. Brilliant. I think that actually brings me to the end. I think it's worth kind of pointing out here that we will be doing more regular market updates, so a webinar every 2 months that will include a lot of these commodities. As I'm sure you're all aware, things change so rapidly in these markets, it kind of pays to do something a bit more regular. And if you'd like to be included on distribution list or invite list, as whatever you'd like to call it, please feel free to email us at pricing@mintecglobal.com or email myself directly, kyle.holland@mintecglobal.com. And excellent. So I think we'll have a look at what we have in terms of questions now. We have a lot of questions. I don't think I have time to do all of those. We'll work through a couple though for sure. So will this presentation be available for later viewing? Yes, it will. Yeah, you can view the recording and you'll also receive the slides as well if there's something you missed or something you want to see. How do you see the impact of renewable diesel and biodiesel developing on price and availability to the food industry? And do you see a significant pushback due to the environmental threat of increasing pressure on forests? That's actually a really good question. So the EU are looking in particular to increase their biodiesel usage. So we have kind of mandates that are looking up to 2030 that are set to increase the amount of biodiesel they want to be used in kind of the delivery and car industry. So that is really, really important. I think that would have a dramatic impact on price and availability because it then becomes almost a tug of war between use for food or use for biodiesel. And I think there's a lot of worries around that, particularly in soybeans, in terms of the US right now. I've had conversations with US contacts about those things. So the tug of war, many people think that food will win that tug of war. I think it's difficult to say who will win that tug of war in general. If it gets mandated, and it probably will be mandated, that more biodiesel needs to be produced across the EU due to climate change, due to various kind of impacts on lines of that, it'd be very, very difficult. Do I see any significant pushback? It depends on what commodity we're looking at. So I think there's certainly a push for palm oil to produce kind of sustainable palm oil. So certified palm oil, whatever guise you want to call it these days. And there is some pushback about the kind of levels of palm that will be produced. So it doesn't look like anymore, at least according to some people that I speak to in the market, that you'll be allowed to increase your acreage on palm oil massively. It'll be a lot more of a long-winded process, a lot more difficult to do so as well. This is a really good question. Palm hasn't been following its usual seasonal pricing trend. Do you think there'll be a delayed pullback within 2021, or will it be later? So I think the issue on palm is a lot of the production. Indonesia hasn't suffered as much of a production issue as Malaysia has, certainly not. But the issue is the overall production from Malaysia. Malaysia accounts for a very good portion of the palm oil kind of production level. So roughly half, there or thereabouts, of Indonesia, 20 million metric tons ish, there or thereabouts, probably most seasons 19. I think most people I speak to think that the pullback in prices, the correction in prices, will likely be delayed. The reason they cite that is production in their minds doesn't really increase massively from Malaysia. Demand, although it could be an issue from India, as we talked about, they still have to cook, and that has been mentioned to me multiple times. They use it as a key cooking oil, so they still need to use it. I think that's certainly something that could keep prices higher, that I hear from the market. Question: despite production lagging behind in 2020, Malaysian stocks have been steadily increasing throughout April and May, from 1.1 million metric tons in March to 1.55 million metric tons in May, which indicates demand is subdued. Do you have any consumption data forecasts for 21-22? if you drop me an email, I'll send those to you, or we can have a chat about those on the phone. I don't think that's something I could do right now, but certainly more than willing to have a chat about those further down the line. So why has China increased their imports double ? On soy and grains for the last 6 months versus 2019? So soy, as I mentioned, is largely because the rebuilding of the hog herd. Their soy imports have been huge because they want to rebuild that. As I mentioned, they intake the soy, crush it, and then use that for meal for their hog herd. So that really explains a lot of why China have been requesting and buying a huge amount from the US and various other places as well for their soy. So grains is an interesting one. China, it's kind of hard to come by numbers a little bit, and what numbers you take as fact is questionable, I guess. So we thought China would have a large stock on some of these commodities. So, for example, corn. We thought they'd have a large stock on that. They didn't. They've been buying a huge amount of corn, and a lot of it's for their internal processes. They use a lot of corn in their poultry feed as well. So I think that's worth mentioning too. Is there any questions in the chat? Let's have a quick look. Wow, there's a lot of questions in the chat as well. Why is sunflower oil not part of this presentation? That's because I did an update on that, which you can find and view the recording of, I believe, if you go onto our page on Big Marker, so you can view that. But sunflower oil, yeah, didn't kind of make the cut today, but there'll be more presentations, and I invite everyone to please message me. I'll just show that slide again. And suggest things you'd like to be talked about. You know, it's an open forum. If there's something, a burning question you have, or a market you think didn't get enough attention, please email me and we can talk about those in a further webinar, as I mentioned. Is there a chance for a 15-minute session on sunflower oil? Yeah, I don't see why not. We could certainly do a 15-20-minute session on sunflower oil to see where we're at with that. Very, very briefly, nearby is very, very static. We do see some action on the forwards though. I think that's probably it. Coconut oil. Yeah, coconut oil I probably will include in further webinars down the line. So some of the tropicals as well. Although kind of right now, it certainly is a hot topic issue. Coconut oil tends to almost wax and wane in its demand, particularly in the EU. Although shipping is having a huge impact on the coconut oil and coconut prices in general. And I think that's probably all we have time for. But thank you very much, everyone, for coming. Please, you know, email me, drop me suggestions that you would like to hear about. We can do those in further webinars. And also, if you'd like to have a chat with me individually about the markets, more than happy to do that. I speak to people on a daily basis in these marketplaces, sharing information, sharing prices. It'd be excellent to hear from any of you. And I really, really do appreciate your time. And thank you very much for coming. Thank you, everyone. Pleasure, as always.